Welcome to the holiday season. This time of year can be stressful on its own, so we're going to enjoy some Christmas lights while going over a brief end of the year financial checklist. And if you want more information, reach out to me because this is just going to be a quick summary to get you thinking about making some changes now in December while you still can. And it's easy to put everything off right now because you're busy with family, you're running errands, shopping for gifts, maybe even out celebrating, and you just want to relax. But if you wait until after the new year to look at the financial year that has passed, you might be costing yourself a lot of money. And the less you procrastinate now, the less work you'll have to do come next tax season anyway. So let's dig in. It's so important that you do this in the current year because I'll reemphasize once the calendar flips to January, you'll be locked out from making most of these changes. People do their taxes in April or March, and by then it's too late to reduce your tax burden for that past year. The most important tax that you can do now in December, and I know this isn't going to be popular, but you're going to want to dig out last year's tax return and you're going to want to adjust all the numbers forward into this current year. So, what you earned in income from this year, all of the different deductions, and any rules that might have changed, you'll want to adjust that on your tax return to see where things stand for this current year. Here's why and the key things you'll be looking for. A lot of tax rules have thresholds. Some of them are absolute cliffs that'll be super costly to exceed, and we'll get to them in a minute, but others are simply beneficial to avoid. And the biggest example of something that can be beneficial to avoid are higher tax brackets. What you're going to want to do is if you are in that 22 or 32% bracket, then you'll really want to heed this advice. Whereas if you know your income is going to increase a lot next year or you're in different brackets, then it might not matter as much for you. But those single people with 50 or 200,000 in adjusted gross income or married couples with 100,000 or 400,000, then there are steps you can take to reduce your income and a lot of your taxes. So we'll go through these steps in a minute, but we'll finish with some other important cliffs besides tax brackets that you should be aware of. So one is the earned income tax credit. If your investment income exceeds $11,600 in 2024, then you'd be ineligible for the earned income tax credit. But luckily, the investment income includes capital gains and capital losses, which we'll learn later in the video can easily be adjusted in the month of December and keep you under that investment income threshold so you can get that earned income tax credit. Second, tuition assistance. If you want the lifetime learning credit, you need to stay under $80,000 for single and $160,000 for joint filers with your modified adjusted gross income, because over those amounts, you're ineligible for the lifetime learning credit. And three, the ACA healthcare subsidies. This confuses a lot of people because when you fill out your subsidies paperwork, they're just estimates. And so if you exceed those estimates, you might owe back payments. And checking for this can get tricky because you have to get the federal poverty guidelines chart out where you'll want to avoid exceeding 200%, 250%, 300%, but most of all, 400%, because once you exceed 400%, the subsidy is fully clawed back. So if you're just above 400% and you didn't think you were going to be, then you might want to reduce your income in December. So we talked about some of the reasons you might want to adjust your income before the end of the year. Now let's talk about how you can adjust your income. And the first one we'll cover is a little bit of each. It's a reason you might want to lower your income if you have a lot of capital gains, but it's also a way that you can adjust and lower your income. So if you want to lower your taxable income, then recognizing capital losses is going to be to your advantage. And if you think your income will rise the next few years and you'll need liquid funds during the next 13 years, then conversely, you can recognize your capital gains and that'll be to your advantage. Another pathway is if you have lots of short-term capital gains this year, you'll want to offset them with as many long-term capital losses as possible. And that's because short-term gains are taxed higher than long-term gains. So you want to try to separate out the years where you recognize your long-term gain from the years you recognize your long-term losses, because technically they're at different rates. So there's a lot of strategies on when it's best to recognize capital gains and losses, and we'll do another video on that. But just know this is a great mechanism in late December to get your income levels to where you need. So switching gears to something much simpler, a simple way to lower your income is via retirement accounts. So if your modified AGI is less than $146,000, then the easiest way would be to contribute up to $7,000 in a traditional IRA. And for whatever amount that you contribute to that traditional IRA, you would be lowering your income. So really, really simple one. And there are a multitude of other ways to lower your income depending on your personal situation. So for example, if you itemize your deductions, then donations to charity in December will further lower your income. If you're self-employed or a 1099 contractor, then don't put off making those business purchases that you'll soon need anyway. So like I said at the top of the video, if you have questions, please reach out in the comments and I'll be happy to do some follow-up videos. But just know that there are a lot of thresholds that you do not want to exceed. And once January occurs, there won't be any way to lower your income, but we're still in December. Then there are a couple ways, like I said, via maybe capital losses, charity donations, and I'm sure there's a much longer list. So look into that, and now is the time to lower that income and avoid those thresholds. Thanks for watching. Don't forget to subscribe to the channel and like this video and comment. Thanks.